Good morning, good morning, good morning, good morning, everybody. It is Thursday, April 27th, a little after 6 a.m. over on the East Coast for you guys, and I'll go as quick as I can through all of this. Yesterday had a little bit of a red day over on the Dow, very green day over on the NASDAQ, and a obvious red day over on the S&P 500, where we filled one of the three gaps that were created at the end of March. As you see over here on the heat chart, Microsoft, 7.24% yesterday, obviously because of what it did over earnings. Microsoft is the number one weighted stock on the S&P and the NASDAQ. So obviously the NASDAQ, it being only one of 100 stocks, very significant. It being only one of 500 stocks on the S&P, couldn't do as much work as it needed to do to prevent us from going red yesterday. So come over, and what I want to bring on as yesterday's 40-point range. Great. Love it. A lot better than having these 25s, 28s, 29s that we were getting all through April, end of March. But what I want to go over here, because we did open close outside the 4100s, you see here we are down 1.13% on the month, but we only have a 120-point range on the S&P, and we've not had a low range like this since the middle of 2021. And I'll bring you into February, more important, because February we only had a 252-point range. And in February, we were looking for that move down from that 4119, or what was it? 4196, 4195 that we hit on February 2. We were calculating 300 points, 4195 minus 300. We didn't get it during the course of February, but we did wind up getting it as we went into the second week of March, where we went down to that 3808. So because we do have the end of the month coming up here and trying to shove that we are going to get a 250-point range for the month, I don't want to make it something that, it's like you need to hand in your homework, because next week we have the FOMC meeting. Next week we have Apple. The market goes where Apple goes, and Apple's in a pretty significant space right now. So we'll leave that as it is for the moment. But I will bring you over here onto the spreads, because we got our minus 1% day over there on Tuesday. After 20 trading sessions, finally got that minus 1%. Now, I went over this as well only in the chat room. Didn't go over this in the email. I would manually have to go back over it again. But having gone back over the course of years, when we have these very long streaks of no visits to the minus 1% levels on the S&P, when we get them, we tend to get a batch of 2, 3 over the course of 5 or 6 trading sessions, 2, 3, 4, like that. So having had just one, yesterday, 40.49, minus 1% was at 40.30. I would obviously be very expectant, and obviously I have been very clear about my bearish bias that we are going to be making a move to the downside as we head into May 5 for the full moon, before we make our significant move to the upside and finally take on those 4,200, 4,300 levels. So at the moment, that's what I'm looking at. And I'll bring you over here onto the charts to go through the SPX for one. And the count that I'm working off of, as I was sharing the other day, I'll try and keep this clean. But yeah, I'm looking at that 4169 having been the 3 or the C. Don't know which one it is yet. But as you come off that Fibonacci, coming off of that, where we can go here 10 days, 1 hour, you've got your 1, 2, and this is incredibly, without a shadow of a doubt, a 3. It's a 1, 2, or an AB, and with the 200 extension having been visited yesterday, 40.51 or 40.55, AB 2 equals C, or this is 1, 2, this is 3. We're looking for a bounce for number 4, and then a larger, harder move to the downside, which would be our 5, and that would complete what we have. So what we should be getting out of this, where we're at, is a bounce. I'll bring you in here to the week to date. We should be getting, come on, man, notifications. Our 50-day moving average is down here at 40.33. Now, that'll be moving up a little bit today. But this bounce off of this what should be the little limit of this 4 should come back over here to either 4077, that 4085, or that 4095. And then from there, the next failure to the downside. So I'm leaving that open that we could get a bounce back into this little resistance zone that we've created. We could get a bounce there before we get a much better, stronger move to the downside. So we'll see how that works out. Here on the QQQ, very similar look where I'm looking here with a 1-2, looking at real-time data, not the after hours. And then we had our 1 that we broke over the 100 extension, broke down the 161.8 and made almost exact contact with the 200 extension over here when we hit that 309.80. Now, we have been floating up a little bit. We've got a little bit of a gap to be filled up over here, but you have now taken out all of your major players, with Microsoft having done all that it can do, and Facebook, that we're going to go over here in a minute, having faked it better than anyone. Revenues are down 20% year over year, and the stock is up over 11%. Well, that's good, because over here on the VIX as well, we still haven't gotten the VIX into the 20s. Again, not that it's anything that is a requirement, but it's something that you see and something that you watch. And the VIX into the 20s will significantly start to improve for the bearish moves and the move on the SPX to the downside faster, harder, and stronger, where we're already starting to get very oversold indicators on larger time frames and getting us set up for a much stronger, much more powerful bounce to the upside. So VIX over here, you've got a gap to fill above. We've obviously got that gap below from earlier in the week, something to watch, but we are on that 1811, and that 1811 is back in play. So that's where we're at over here on the VIX. So let me bring you out before I bring you into Facebook. And so here for today, this is what I'm looking at here for today, is this being the safest of safe trades for the SPX credit. Now we have GDP coming out at 8:30. So obviously if you'd like to wait for that to come out, or you don't have interactive brokers, 4105s, 4100s, same as yesterday. Yesterday they were giving $1. At the moment now we're only getting 70 cents. We do have a gap up on the SPX of about 18 points. So there is a gap below that we've created that will need to be filled. So that is what I'm looking at as the safest of trades. Now for a riskier trade, using that resistance area, that 40.95, 40.90, you're getting about $1.35 at the moment. So this is what I would be looking at for the 0 DTE to go a little bit more aggressive and bring you back over onto the SPX. This is where you're looking right here. Oh. That zone with the 40.95, which we failed over here, excuse me, 3 days ago in the morning or in the afternoon, when we failed after Joe Biden said he would veto the McCarthy's tax bill. And then you can see over here how this 40.85 has been resisting. So that's what I would be looking at from an aggressive point of view. Now, coming over to Facebook, where Facebook is the only place in the world that you don't need to pay to go out there and either cry, bitch, complain, or laugh your ass off. You come out and you see where your Facebook is from a much wider point of view. And this is where you were heading into earnings. This is a weekly, and you can see how your weekly is just ridiculously fucking stupid overbought. And you've got your gap up overnight. And we come over here onto our gap up, and here is our Facebook, and this is our gap up overnight. Now, here, this 236.21, this is your 50 retracement back to the all-time highs. So I don't think I get it here. No, I got to go out. So we'll go to a 2-year, and you can see it much better. And this is where you're at. You're at your 50 retracement to your all-time highs at 236.21. You've got this ridiculously large gap to be filled from back in 2022 when they completely shit the bed. Now, year over year, from here to here, their revenues are down 20%. Yet here we are from 88.09 up to 236.21. So Doesn't take a rocket scientist to start looking at Facebook and thinking this is a good thing to get short out further out with a very long view. But this is where we're at for right now. You've traded down here on that resistance of that trend line that you've seen all week long, making sure that it respected it. And suddenly, out of the fucking blue, boom, you get this unbelievable TikTok is going to be deleted and everybody's going to go on to Facebook. So you've got 236.21 as that big 50 retracement. You've obviously got this very large gap to fill. 218.62 being that major price level down there below. And so this is what I'm looking at. I want to see the pricing of as soon as we get open. And this is for Friday. This is for tomorrow. And it would be buying the 237.50 calls and selling the 235 calls. Come back onto the chart. Right here, we're trading at 233. I threw out something very similar to this on Microsoft, where I was saying buy the 302.50 calls, sell the 300 calls. 296.83 did a fantastic job of resisting all day yesterday, and here you are floating down back into that mid to lower 290 area. So it's a trade that's out there. It's a trade that can be taken. I would actually even go out and look at wider stuff. I would look at next week. In fact, I'm going to share that in the email. Next week's 236, 235s. The week after that, 236, 235s, or whatever the hell the combination is. 235, 230, 235, 230, 250. The credit's there. You might be in the trade for a week, but I would immediately right now be looking at that and saying, there is no fucking doubt in my mind I would be taking a Facebook credit trade. Even Microsoft, same thing. Somewhere out 1 week and looking for it to be closing below 230. Money to be made. Share it in the chat room. See you guys in the room.